Ladies and gentlemen, hit subscribe to this channel right now. After this live stream, go to the Stock Market Crash channel. The link is in the description of this live stream. I'll have another live stream on the Stock Market Crash channel. We'll get that going. Unfortunately, and hit subscribe to this channel. I have been predicting a market crash for about 2 years now. A little over a year and a half. I wrote about this in the Federalist. And right now, Real Clear Politics has Trump up 1.2 points in an average of polls. I think that he's going to be up about 5 or 6 points when the market does completely tank. Unfortunately, I do believe, now tomorrow it could go up again. That's just the nature of the stock market. But I believe the economy is heading towards a recession. I believe that Kamala Harris is going to have a very difficult time. When the market tanks, it'll be the equivalent of 2008 with the old Republican Party. And Democrats will be doing to the Democratic Party what Bush, Cheney, and Rumsfeld Republicans did to the old GOP. Hit subscribe to this channel right now. Dow closes nearly 500 points lower Thursday as investors' recession fears loom. CNBC, CNN, why the stock market is suddenly freaking out. Wall Street Journal, Dow Jones drops around 500 points. A 10-year yield falls. That's an important one also. Barron's, the stock market doesn't look like the dot-com bubble. It's something worse. I have been telling you this for a long, long time. I correctly predicted every single one of the Supreme Court victories for Trump, from overturning the Colorado ban, and you will hear from economists and analysis right now. I predicted the unanimous Supreme Court decision overturning the Colorado ban, unconstitutional Colorado ban. I predicted the immunity victory. I did say, I think that, I wasn't certain about this, but I did say I think that the January defendants would have their sentences reduced, and I do believe that. I was wrong about Clinton replacing Biden, but I was right about Biden resigning. Kamala Harris was even less popular than Biden, so I don't see how she can defeat Trump, especially when the market is collapsing. You'll hear from experts on the stock market in a second. There's really no expert on the market, only maybe like a handful of people in the world. But I've been telling you, ladies and gentlemen, this is going to tank. I have been telling you this for a long, long, long time. And inflation is a huge issue. This is the indicator, ladies and gentlemen. Inflation and interest rates. You can look at the polls. You can look at media, which is all in the tank for Democrats. You can look at late night, whatever, comedians. It doesn't matter. It doesn't matter the Hollywood celebrity that backs Kamala Harris. If the market tanks, Trump will win 100%. I don't want the market to tank, although I want Trump to win. I'm voting for Trump. I want record low poverty, record highs in household median income. It benefits every demographic, every constituent, every American of every background in this country. Low inflation, low interest rates, record low poverty with Trump, record highs in household median income. I want a great economy. You look at what's taking place in the Middle East. The global scene is an absolute unmitigated fiasco and catastrophe that is directly the fault of Democrats, Biden, and Harris. Let's continue with this. I believe that there's going to be, unfortunately, a market crash. I've been calling this for a long time. Read my writing in the Federalist. You could type in H.A. Goodman Federalist, or you can go to hagoodman.com. Be here tonight on this channel for the live stream, and I will do another live stream on the Stock Market Crash channel tonight as well. But after this live stream, go to the link in the description and you will see the live stream on the Stock Market Crash channel, my other channel that I have. And unfortunately, we'll also have a Bitcoin crash as well. That's crashing. I have a crypto crash channel also. Hit subscribe, people. This is unfortunately history in the making. It's directly the fault of Democrats, bureaucrats, media who pushed to shut down economic activity 4 years ago. Hit subscribe right now.
And about town, Kevin Warsh, he writes in today's Wall Street Journal, interest rates are a sideshow in the Fed drama. Kevin Warsh, former Federal Reserve governor, and now a distinguished fellow at the Hoover Institution. You're still teaching in school out there, aren't you?
Still teaching.
It's extraordinary. The best line in this whole piece is, I just said to you offset, the high priest of central bank dogma might consider it blasphemy, but monetary policy has something to do with money. Now, we have charts up there to show a good picture of the so-called monetary base, or the Fed's balance sheet. Let's put that chart up. There it is. It has just exploded in the last 15, 20 years, and it's come down only a tiny bit. And that's the point you make in this article. It's not this obsession with the Fed funds rate. It's this, because the monetary policy is about money, and money is about inflation.
That's exactly right, Larry. So going into this meeting this week, you hear all of the commentators,
People, if you want Trump to win, watch the inflation numbers, watch the Fed funds rate, interest rates. They say they want to cut interest rates. That's going to raise inflation. So I don't understand, I get it. They want a better stock market. It's not going to help the stock market. It's already crashing. Again, it could go up tomorrow. I really don't care whether it goes up tomorrow. I do think there's going to be a terrible market crash before November. Which will cement, unfortunately, the market crash takes place, but it cements Trump's victory.
all the central bankers talking about, are they going to cut rates this week, or will it be September or November? But they're hiding the ball. The ball is really about the financial assets the central bank bought starting in 2008 crisis, but it accelerated during the pandemic. And when it accelerated in 2021 and 2022, sure enough, the explosion of money, the explosion of the printing press, inflation went with it. Over the last 3 quarters or so, they started to bring down the balance sheet just a little bit, and sure enough, inflation fell. What worries me, of course, is that they're going to get out of that business. They've been signaling in the last several months the balance sheet runoff is slowing down and it'll stop soon. And as a result, I don't know what their theory of inflation is, but I think a better theory of inflation says they're going to have a problem if they keep at it.
Well, that's the thing. Let's just put that chart up on the full screen again one more time so viewers can get a look at what Kevin Warsh is talking about. You can see the explosion from the financial meltdown when just before he came on the Federal Reserve, but what, 2006? Is that
That's
what
right.
you just told me? And the balance sheet was about $800 billion. It's like any bank has a balance sheet, or the footings of a bank. This is the footings of the Federal Reserve, except theirs is all underwater. You can see the explosion, 2 explosions, one after the financial meltdown over.
How many times is he going to use that non-algorithmically friendly word?
Mortgages, and then the second one over the pandemic. They didn't even race the second one, which they should have, since the pandemic's been over for quite some time. Now, your point is, it makes you suspect, makes anybody who understands this suspect, that the lower inflation or disinflation may not be permanent.
That's exactly right. Money is a dirty word around central bankers. It's a dirty word in the Harvard economics department. But good common sense says too much money chasing too few goods is the key to inflation. You and I don't know exactly where the economy is going to be 12 months from now. There's elections, there's changes in policy. But we know if you keep the printing press going, that this improvement we're seeing in inflation is going to disappear. The Fed doesn't seem so worried about inflation. That's why they last November promised there'd be all these interest rate cuts this year. American people are still worried, and for good reason.
It's a huge factor. The other thing you mentioned in there is Mr. Jay Powell, not to be personal, but on a policy basis, has actually encouraged the federal government for federal spending, massive federal spending, which shows no signs of abating.
That's right. Those assets we were talking about, you know what those assets are, Larry? They're treasuries that the Secretary of Treasury are issuing. I don't believe over the last decade, especially over the last 4 years, that Congress would have authorized this massive surge in spending in 2021 and 2022 if they thought it was going to be expensive. What kept the interest rates down? Because the Fed were buying those assets. It wasn't a willing buyer showing up in the Treasury market. It was a captive audience, the Federal Reserve. Yields are falling this year. Yields are lower than they otherwise would be.
Stocks are booming.
And stocks are booming.
So it doesn't tell you that anything's tight. I mean, if financial markets are that loose, right, lower rates and higher share prices, it may not be the only thing, but it means what? Credit conditions are not tight.
That's right. They keep saying that the
We have record highs in credit card debt fueling consumer demand in Biden's economy. What took place, and I wrote about this in the Federalist in late 2021. Okay, I'm 2 years too early, whatever. The point is, when you shut down economic activity, then you have people like AOC who did the worst thing possible, said, oh, eviction moratorium. Well, you prevented people from working. You prevented families from earning money to pay rent. You didn't have, first of all, the shutdowns economically and also in terms of domestic policy were the worst things that could ever have taken place. It was an economic sin pushed by the usual suspects whenever it comes to the most apoplectic, hysterical economic policies. So who pushed for the shutdowns? Was it Trump? No, but they blamed Trump for the billions and billions in stimulus. And it's like, well, the trillions in stimulus, that was because Democrats, media, bureaucrats, and never Trump Republicans just went on board. Trump should never have acquiesced, but when you shut down economic activity, you pumped trillions of dollars, well over 10, 12 trillion. That's a conservative estimate. And then inflation goes up. Inflation goes up, and then you have a scarcity of goods, services, because demand was artificially reduced to like zero in many cases. Then demand suddenly rose and spiked exponentially. Then you had inflation. Then you had businesses that were in need of jobs and resources, like the oil and gas industry. Then they released strategic petroleum reserves, Biden, millions of barrels, while at the same time lecturing about the environment and the planet and begging other countries for oil. And also getting sued by oil and gas associations. Core inflation went up to 9% right after they said inflation was temporary. Okay? They said inflation was temporary. All right? And we can go on forever, but let's continue.
Monetary policy is tight. It's restrictive. Look at Wall Street. It's hard to find that at all. SPACs are coming back onto the market. Since Chairman Powell and his colleagues promised in December that they'd be cutting rates, there's been $12 trillion of U.S. stock market wealth. That camouflages a lot of sins. It's certainly a good way to get through the election season, but it's not a good way for long-term prosperity.
What you want them to do?
What I want them to do is focus on the balance sheet, focus on assets, shrink the balance sheet back down to size, let the private sector grow.
Yeah, that's it. Could have some tax cuts and
So the market tanked today. The Dow, NASDAQ, Bitcoin all fell. And this is, ladies and gentlemen, something that people have been talking about for a long time.
The last 48 hours, of course, taking a look at the Dow, big comeback today after a big beating yesterday. The same.
This was 2 days ago, 4 days ago. Today it tanked. Everything tanked, and I think that the market is pretty much about to crash, either next week or the week after or tomorrow.
Same for the NASDAQ. So what do you buy? The free fall yesterday or so far the comeback today? Peter Eliades, the Stock Market Cycle editor and publisher, was certainly not buying a bull market, at least for the longer term. Peter, what do you think?
Oh, Neil, I'm so happy I could talk with you to attempt to revitalize what must have been a painfully quiet and boring past few weeks of news for you.
You're right, my friend. But you've been looking this apart from all these, fundamental developments, because you read the technicals. And what do the technicals tell you?
Well, right now the technicals are getting more and more bearish. One of the things that when you know that I'm very much.
Again, this data is not from today. The Dow, S&P, NASDAQ, Bitcoin all tanked.
Maybe 99 and 44 100% ivory technician and not fundamentalist. But the one fundamental thing I like to look at, Neil, at extremes is valuation. valuation is completely useless, usually. It can give you an idea when you get to real extremes on the low side or on the high side. My favorite valuation metric is by John Hussman of Hussman Econometrics. And on July 22nd, Neil, Hussman said that on Tuesday, July 16th, his valuation metrics reached the greatest extreme overvalued in history.
The greatest extreme overvalued in history during Biden and Harris's administration. Why do you think that is? Well, it's from trillions of money being pumped into the economy and stock market because you had the usual highly educated, morally superior pushing 4 years ago. The origins of this catastrophe happened 4 years ago, ladies and gentlemen, when they shut down economic activity.
Of 100 years, going back to before 1929. So the greatest extreme overvalued in history of 100 years, going back to before 1920. July 16th, his valuation metrics reached the greatest extreme overvalued in history of 100 years, going back to before 1929. So that was impressive. And he mentioned July 16th, and of course, we've started to come down from there. Now, does that guarantee a top? Of course not. But the point is, Neil, where is the next 15, 20, 30, 40, 50% going to be? My evaluation of the upside potential from current levels is we have a 0 to 5% chance of going up 10 to 20% from here. And we have a 50 to 70% chance of going down more than 50%.
So when you look at that, Peter, you talk about overvaluation. In other words, the price of stocks simply don't match or in sync with their earnings that really support them, and that can't be sustained for varying. But the issue is,
when the market realizes that earnings cannot be, when the value of the valuation in the stock market cannot be sustained by future earnings, which will plummet, then you will have a market crash. You could have Bitcoin at 10,000. Okay, actually not down 10,000, at 10,000 or below 10,000, and then you get the crypto Ponzi schemes that are washed out of the system, which are probably trillions, or I should say hundreds of millions at least, in terms of crypto Ponzi schemes. Billions when you look at Sam Bankman-Fried. So how many people like that in crypto? Okay, probably a lot of people committing fraud or Ponzi schemes. And now you have also big banks. You have Wall Street tied into it. So when Wall Street tanks, crypto tanks, then you have a cascading effect where banks could be involved as well. Hedge funds could be involved, which they will be, unfortunately. This is all happening because Democrats pushed for the most outlandish, counterproductive policies 4 years ago.
a lot of folks I talked to are bullish said, well, the earnings will catch up with the price, like in NVIDIA's case, where it would have like this, sky high multiple. The earnings would come out to bring it back down more to earth, so that the earnings catch up. That's the hope. You don't buy that, right?
Neil, do me a favor sometime. Bring someone on that's a mathematician. Have them figure out the capitalization of NVIDIA, Microsoft, and Apple, perhaps. If you sold NVIDIA, Microsoft, and Apple, you could buy the complete economies of Great Britain, Germany, and Italy. I mean, everything in that country that's listed on the
What? Let's listen to that again.
Figure out the capitalization of NVIDIA, Microsoft, and Apple, perhaps. If you sold NVIDIA, Microsoft, and Apple, you could buy the complete economies of Great Britain, Germany, and Italy. I mean, everything in that country that's listed on their stock exchange, you could buy their complete economies with 3 stocks. I'm sorry, that is ridiculous. That overvaluation, especially in terms of technology, is just incredible. Look, NVIDIA is a fabulous company. AI is going to provide a lot of help for a lot of companies. But when you think you can sell one stock and buy the complete economy of a large European country, you're smoking a lot of stuff, Neil.
But you had to dump my Italy into those other countries, didn't you? But let me ask you a little bit. You could throw Switzerland in there and even it up. But let me get your take then on what you see happening after we have this small percentage possibility of up to another 20% run up. And then what happens? Spell it out.
Well, if we go that far, and I'm very, very dubious we do that, the only thing that saves this time zone that we're in, perhaps, is the election. So a lot of people may say, well, let's wait to see what happens going into the election.
Right.
That might hold the market up. I can't be confident about that.
I don't think the stock market will care. I think it'll probably, the more media pushes an eventual Kamala Harris presidency, the worse it is for the market, because that will equate to a lot more government spending, greater debt. The market knows that debt is what is going to be one of the reasons that everything tanks. Debt, along with trillions in stimulus over the past 4 years, bad combination for economic growth. Then you have inflation going up if the Fed lowers interest rates. The only reason interest rates were high is because inflation was high. That's why when Democrats say, well, inflation's been taken care of. Yeah, go get a car loan or go buy a house. It's double the mortgage payments. See, I used to be on the left, and over the past 5, 6, 7, 8 years, I understood the financial markets, but I forgot them, okay? Like years and years back, I used to be a stockbroker. But when you become part of that ideology, you're a progressive or you're on the left, you want to ban fracking. I thought that was a good idea, even though it was against my understanding of financial markets and the economy. So when you fall into the trap of being a morally superior, highly educated, liberal Democrat or progressive, you push for things that are actually going to make the working class, their lives much harder. The working class, if you want to call the middle class that, or did much better. Lower socioeconomic people living in what Democrats or liberals or communists call the working class did much better under Trump than they did under Biden. That's why they forced out Biden. It wouldn't have mattered if he couldn't communicate if he had a great economy. The bad thing about Biden is that he can't communicate. He's one fry short of a Happy Meal, and he stinks in terms of economic and foreign policy. That's why they ousted him. And Kamala Harris is going to do the same thing. So I think that the market crash cements Trump's victory, despite overwhelming Orwellian support by media, which has been in the tank for Democrats for like 7 years, 8 years now.
But everything that I look at, Neil, is telling me that this market is an accident, and a really big accident waiting to happen.
So what do you buy, Peter? In this environment, how do you safely play it?
You don't play anything. I'm not giving any investment advice, but I would get, if you had... you don't time the market, right? I understand that, but I'm not giving any investment advice. But if I had money that I needed to live and I couldn't withstand a 30, 40, 50% drop, I would get out. Okay, I'm not telling anyone in that situation to do anything. I'm not telling you to do anything. I'm just saying, if I don't have any money in the market because I think it's like a casino. But if I if I had my retirement account in the stock market, I would pull everything out now. I'm not saying you should. I'm saying I would. Because we're at such high valuations that the stock market is expecting the economy to boom and to do amazingly well the next 2, 3, 4 years. That ain't going to happen. That ain't going to happen for a number of reasons. And I wrote about this in the Federalist.
If you want to be real conservative, of course, you buy T-pills. They're finally giving you some kind of return. Think of the time between 2000, Neil, and just 3 or 4 years ago, or a year or two ago, when you were lucky if you got 1% with T-bills.
You're right.
You're getting over 5% with them now. And is the market going to compete with that? Well, the people that bought NVIDIA a year or so ago are going to say, who's interested in 5%, man? I'm looking for 100% a year. And they got it, and they're so happy that they think it's going to continue ad infinitum. It's not going to happen. It never has before, and it won't this time around. That one stock can buy the economy of a complete large European country, Neil. That's the only thing I have to say.
Maybe it can. Maybe it's worth it. Maybe it's worth it. You
Come on.
just don't know.
Well, remember, they have chip stocks of their own. So it's not just like you're buying
Very true.
apples and pizzas.
Okay.
It's
now
just
you
an
threw pizzas
incredible
into
concept.
the mix. All right. Peter, always good to see you. I could talk to you for hours, my friend, but a great read on.
So, ladies and gentlemen, forget about, again, I'm not pulling for a stock market crash because I know people are going to lose money. I'm not pulling for a crypto crash because I know people are going to lose money. I do want Trump to win. I think that Trump is the only thing standing in the way of complete chaos and catastrophe in terms of foreign policy, domestic policy. Democrats see it the same way, but because of media, there are voters who care very much about what the Washington Post and New York Times say, and CNBC and MSNBC. And then there are voters who look at inflation, interest rates, foreign policy, the border, and they say, my God, this is an unmitigated disaster. And then there are, like I said, people who just look and say, oh my God, Robert De Niro doesn't like Trump, so he's terrible, Trump. And Trump is mean. And I'd rather have an economy that is going to tank with a stock market crash and a possible nuclear confrontation than Trump. It's like the cult is not the Trump supporter. It's actually the people who despise Trump for no reason. And there really is no reason to have that disdain. You can dislike his policies, you can dislike his personality, whatever. But to actually look and say, yeah, I'd rather have 4 more years of high inflation, high interest rates. And like the inflation crisis, food inflation is still up. In fact, it's up like 25% from when Biden took office because inflation is compounding. But the stock market doesn't look like a dot-com bubble. It's something worse. Jeremy Grantham has been calling this for years. He's a brilliant billionaire who called the 87 crash, 2008 crash. And he's been saying this is worse. So, and this is because, in my view, the Democratic Party, the media, the Orwellian response years back to you know what. Let's listen to analysis of the labor market.
Folks, these days, I don't know, when it comes to Wall Street, it reminds me of my favorite Twilight Zone episode where everyone decides that these aliens are our friends, but there's one researcher who cracks the code. Unfortunately, it was too late for her to save her colleagues from being whisked away to their planet where they were put on a menu with all the other Earthlings. Well, my next...
How to serve man.
Two guests never stop working to crack the code, which is why their work is incorporated by so many on Wall Street. Joining me now, Chief Economist at New Century Advisors, Claudia Sahm, along with our friend Michael Kantowitz at Piper Sandler. Hey, Claude, by the way, both of you in recent months have seemingly backed off your own work, or at least the implications of your own work. Claudia, let me go with you. I mean, are we now potentially on the cusp of recession?
the SOMRO, the recession indicator, I think a lot of what we see in the labor market, it's sending the right cautionary message. Things have cooled off. We should be concerned. And yet in the context of a very unusual, very disrupted economy of the past 4 years, they're not flashing red. I mean, we have to set these in context, and that's been tricky because this cycle kicked off by the pandemic.
Are they flashing yellow?
Yes.
Okay.
Yeah, no, there are very serious reasons to be concerned about the labor market. Not that we are on the edge of a recession or we're just right in one, but those are very serious risks. Being headed towards potentially 3 months, 6 months, we should be thinking about that, and there are policymakers that should be thinking hard about that.
And when there's a stock market crash, unfortunately, there will be layoffs. So that could, facilitate or be the catalyst or expedite a recession. See, what happened the past 5 years is not normal. Okay? It wasn't normal. We had a normal economy. You could look at Bill Clinton, Bush. Well, Bush, then there was credit default swaps, and he tanked the U.S. economy, or the stock market tanked the U.S. economy under Bush's administration. I think that you could, if banks are too invested in crypto, you can have a lot of banks, smaller ones, not the top 5 or 6. So it might not be a too big to fail moment, or it could be, but you'll have a lot smaller banks throughout the country with people pulling assets out. And if there's too much exposure to Bitcoin or crypto, that's going to be a big problem. Big problem. Then you'll see layoffs because the businesses will be affected by a market crash.
Mike, a couple months ago when we had Lydia mentioned the 6.9 million, up 13% year over year with the unemployed number. I saw an article where you kind of downplayed it a little bit.
By the way, why vote Trump? If you're a liberal, Democrat, progressive, communist, socialist, and you happen to stumble upon this, and H.A. Goodman, he used to be a Bernie Sanders. Oh my God, why vote Trump? We had record low poverty, fact. Record highs in household median income, fact. And why is that important? You could say, well, we had similar numbers with Biden. No, we didn't. You want to know why? Because interest rates were low and inflation was low. Okay? The Fed funds rate was a tiny fraction of what it was. Interest rates were a tiny fraction of what it was under Trump. Okay? Inflation was a fraction of what it was, of what it is now with Biden. Okay? So with Trump, the Fed funds rate, interest rate, inflation were tiny fractions of what they are now. So you could buy a house for half the mortgage payment. In Biden's America, Harris's America, it's double the mortgage payment. Then they say, oh, we're going to help you with student loans. Well, you can't buy a house because interest rates are too high. But see, again, these are it's all about Trump's personality to Democrats. It's not about actual inflation, interest rates, what's taking place throughout the world.
Where are we now with your work?
Yeah, it's that my rule triggered 3 months ago, and it's continued to rise. We've got about a 12% increase.
That's a great question. I gradually woke up, and there were numerous epiphanies. So when you're on the left, that's a great question in the comment section. I became a conservative on most things because I realized that the left is a fantasy world that a lot of it doesn't exist. Some of it's good. Some of it is, just or moral. Most of it is immoral, unjust, just condemnation, judgment for just judgment's sake. When I saw people disowning friends and family, like people disown me, friends of mine, lifelong friends, and people arguing about the different Medicare or single payer plans, Democrats have no intention, nor is it even feasible. So and then they cheated Bernie Sanders, which is the greatest epiphany of all time. And actually, they cheated. If you look at what took place with Biden, he won his primary. So it's all smoke and mirrors. It's this, if Democrats didn't have all of media, all of late night comedians, media, the major newspapers around the country, they wouldn't have the constant 24/7 spin and propaganda and public relations monstrosity. They couldn't compete with Trump. Trump is up with only negative media coverage. See, politicians need negative media. They need public relations and media. Trump doesn't have any, still up. So you slowly wake up. And the main thing was Trump's economy was great. His foreign policy was good. And what really the epiphany is, hey, wait a second, Trump is the anti-war president. That's what gets me. I don't want Americans sent to never-ending military conflict. It's a moral imperative to vote for Trump, especially when you see what's taking place at the border, for people entering the country and for people within the country. But see, again, these are like, Democrats pride themselves on being moral. Most of their policy positions, most of their viewpoints are actually immoral. Not just, not moral, because of a lack of understanding, a lack of information, and media shielding them from reality. But let's continue. And the upcoming stock market crash is an example. We've all seen it. I've predicted it, and people wealthier and smarter than I am that have predicted it as well.
In the year-over-year change in unemployed people, and forward-looking indicators that I look at that have been consistent across history, i.e. 80 years of data, are still pointing for that to continue to move higher.
So Goldman put out a note saying that there are fewer immigrants, right? Fewer migrants coming into the country. So right now they say 150,000 monthly jobs will keep the unemployment rate stable. Mike, are you buying that? And how do you factor that into your work?
I think it's difficult to dispute it.
Unemployment will go up, unfortunately, when there's a market crash. Companies are not going to, especially companies that in media that aren't doing well already, aren't going to be able to raise the money to continue simply, devoting their lives to, slamming Trump. But let's continue with this.
President Stephanie Pomboy. All right, Stephanie, so it feels like the Fed's between a rock and a hard place here.
Absolutely. I mean, they definitely did a number on themselves this time. And I have to agree, in terms of Madison's commentary, the inflation thing is really the sticky part, because as you know, we're still living in a world of high energy prices that don't seem to be moving lower anytime soon. And then also you have this housing component of the CPI that stopped going down. Existing home prices are now up year on year and substantially, and that is going to feed through to that CPI with a lag. So I think we may have seen the declines already through, and it's going to be hard for those numbers to come down a lot from here. On the other hand, the unemployment rate is signaling that it's time to cut, and I think that's why Bill Dudley's hair was on fire on Monday when he said, the Fed has to cut and cut right now. I think he rediscovered the SOM rule and realized that the unemployment rate's going to shoot higher. But yeah, the Fed's in a box, but they've placed themselves there, so I have very little sympathy.
So another problem, though, right? Let's face it, though, another problem for the Fed and every American, all the deficit spending, the national debt, which, by the way, officially crossed $35 trillion last night. That's right. We did it again, folks. Now, and you wrote a piece that says that there's a simple and elegant fix that could serve as a bridge to a time when maybe we would start tightening our belt. Walk us through that. Simple and elegant. I want to hear it.
I know it sounds almost too good to be true, and I'm the last one to buy into those kind of ideas. But yeah, we are the problem that I've been really concerned about for a long time, and you and I have talked about previously, is how are we going to finance these deficits? Obviously, we need to at some point get serious about reining in spending and reducing these deficits. Right now, neither political party seems to have any interest in doing that. And with the economy in its fragile state, whether you believe it's in recession now or headed there or not, clearly it's fragile. Now is not probably the time to impose the magnitude of discipline that it would take to get this budget under control. That said, we still have this massive problem where we're issuing $2 trillion plus in treasuries a year. Foreign central banks who used to pull down all that issuance purchased 70 billion over the last 12 months. 70 billion. So we have a shortfall of $1.97 trillion a year. Who's going to buy all these treasuries? For a while, we had the Federal Reserve doing it. And my concern, as I've voiced to you many times,
people buy treasuries when the U.S. economy, the United States is still the most stable economy, even with a market crash. Okay, but if we're alienating major countries with endless military conflict throughout the world, we're in a market crash ourselves, maybe causing other market crashes throughout the world. Might not be attractive for other countries to buy our treasuries.
Is that's the only solution. The Fed is going to have to go back to monetizing treasuries with all the dollar debasing inflationary consequences of it. There is a solution, and we'll see if anyone buys into it, and that is if we made treasury securities tax-free.
Will never happen. Democrats will never in a million years allow that. But that is a good idea.
Same way that municipal securities are tax-free. Right now, if you buy treasuries, the interest that you receive is taxed at the federal level, not the state and local level, but you do pay federal taxes.
Right.
If we did away with that, you would generate a huge new source of demand for treasuries as people took advantage of the tax-exempt status. So you'd create domestic demand for treasuries rather than relying on foreign central banks and the Federal Reserve to finance these deficits. And if you do go through the math, it actually costs nothing, because as the demand for treasuries increases, the decline in interest rates and treasury interest rates lowers the debt service so much. I mean, as you said, we're at 35 trillion. A 1 percentage point decline in treasury yields wipes out $350 billion of debt service. So, and the interest that the taxes they're collecting on this interest is around 100 billion a year. So you give up 100 billion to save 350 billion.
AOC and Bernie Sanders would never allow this.
It seems like a no-brainer. So I think this is a simple and elegant solution. We'll see if anyone, Trump, are you listening? This is an idea. And again, it's not to get around tackling the budget. We need to do that. Now is probably not the time, and it still won't solve the issue of how we finance it. We could bring the deficit down to 1 trillion. We still have a massive shortfall in the demand versus the supply.
Well, I think if Trump is listening, you got his attention at tax-free.
So, ladies and gentlemen, I will be back tonight at around 10:30 p.m. We're doing maybe 4 live streams a day. Please, right now, go to the Stock Market Crash channel. It's in the description of this live stream. I'll be there in a couple of minutes. Let's, if you could be so kind, let's build that channel back up. It's at 20,000 subs or 19,000. Let's get to 30, 40,000 subs on that channel. Unfortunately, I think we're going to be doing a lot of work on that channel as well because of the terrible market crash ahead. That's why I named it the Stock Market Crash channel a while back. Hit subscribe, people. If Trump is up 1.2 before the market crash, he'll be up 5-6 points. Easily 3 to 4 points before November with the market. Again, I want Trump to win. I know he will win. The media calling Harris, infinitely better than Biden. 2 weeks ago, she was actually polling worse than Biden and had lower favorability numbers. But you know how media works. Hit subscribe. I'll be back tonight. We'll talk about Supreme Court and an upcoming victory for Trump. Hit subscribe, people. Go to the Stock Market Crash channel right now. It's on the homepage of my YouTube channel for this channel. And it's also the link to the live stream is in the description of this live stream. Thanks, everybody. I'll see you in a second. On the Stock Market Crash channel. Hit subscribe. Be here tonight at 10:30 p.m. Eastern for